The program sets restrictions on both net and gross monthly income broken down to household size. But the barrier to acquiring food aid in Michigan has been lowered. It is Governor Gwich'in Whitmer signed a bipartisan bill removing the asset test as a requirement to receive SNAP benefits. And according to the Michigan Executive Office of the Governor, the move will offer greater financial security to those who need it the most and ease the burden of receiving aid. Michigan is now one of the 37 states with similar laws, and the governor says people who had more than $15,000 worth of assets, including vehicles and savings, were disqualified for food. She'll say that 500,000 children in Michigan will benefit from the limited asset. And now in Maine, all recipients of the SNAP program will have their monthly benefits delivered to them by today. SNAP benefits are distributed to eligible residents from the 10th to the 14th of every month, with all beneficiaries scheduled to have their benefits by the month of July by Friday. Now, the next round of SNAP payments will also begin on August 10th. The state of Texas will complete issuing SNAP benefits worth up to $1,700 for a month of July this week. Texas has a long window for issuing payments, lasting through the first 10 days of the month. Even the amount received depends on one family size. A single household will receive $281, and an 8-member household will receive $1,700. But on a federal level, some House representatives want to expand the number of food stamp recipients subject to work requirements and time-limited food benefits by raising the age of people covered by the rules to 65. Members are writing the bill against the backdrop of extraordinary uncertainty in the economy and inflation, including the cost of food is so high that the Federal Reserve is willing to risk a recession to slow the prices down. Economic disruptions are caused by the crisis, and the robust labor market is expected to weaken in the months ahead. The past week, Democrats of the Department of Education announced that it will begin discharging student loan debts for borrowers who've been in repayment for 20 to 25 years under a one-time payment. Around 800,000 borrowers will benefit from this, and there will be $39 billion dropped. Joe Biden said the previous announcement is a one-time adjustment and will become an even more important lifeline for struggling borrowers than repayments start in September. The one-time payment adjustment the Education Department had counts certain months that were previously ineligible towards student loan forgiveness. But now, everybody, the Education Department announced a one-time payment adjustment for all direct loans and federally owned family education loans. Now, the adjustment to student loan accounts will go toward helping borrowers get closer to forgiveness under the income-driven plans. And after this adjustment, people should be getting stimulus payments because the one-time payment adjustment helps to reverse some of the damage caused by loan services that did not properly track deferments or steer borrowers to forbearance, instead of income-driven toward repayment payments, which would have continued toward years of payments. Some borrowers in the public service loan forgiveness program have already seen the payment adjustments in their accounts, so we know that's a good thing.
Pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from
300,000 child tax credit rebates this year to single parents earn less than $100,000 in 2021, and the two-parent families that earn less than $200,000. Families must file with the State Department of Revenue Services before June 1st and July 31st to receive a credit. The administration said it expects to issue the relief in August. Around the same time, it also expects to distribute $40 million to $45 million among roughly 180,000 working poor households who claim the state's earned income tax credit on the 2021 state tax returns. The state earned income tax credit currently is worth 30% of the federal credit and provides recipients an average benefit of $700. The one-time $300 bump Lamont and other Democrat-controlled legislature approved for earned income tax credit recipients effectively raised the state credit temporarily to 42% of the tax benefit. But tax reform advocates have been pushing for years to make permanent a child tax credit and enhance earned income tax credit program. The governor has said he wants to reassess the state's fiscal health after much of the $3 billion in federal crisis relief Connecticut received last year has been exhausted. Over the weekend, buyers paid a $5 a gallon, or roughly $100 to fill the tank, and gas prices have doubled since Biden took office. JP Morgan analysts predict $6 a gallon by August, and experts warn this crisis will continue even after Biden's term ends because he's dismantling fossil fuel production. There are now 20 states plus Washington, D.C. with averages of $5 or above. The highest price states remain California with a state average of $6.42 a gallon. 31% of the nation's 130,000 gas stations were already selling gas for more than $5 a gallon. There are stations and states where gas is cheaper. About 15% of stations nationwide still are selling gas for less than $4.50 a gallon. But even in May, states where gas is cheaper, such as Mississippi, lower average income can mean drivers have to work longer to fill up their tanks. Biden has fighting. New data has been released, and it's by the federal government. Nancy Pelosi has made an announcement on inflation. Millions of low-income households can expect to receive inflation relief checks very soon, and these payments will be automatically sent out for some, while others may have to take action to receive this assistance. And not only that, you guys want to be sure to continue to watch this video because it gets much more interesting. Now, as Republicans regain momentum on concerns about the economy, the only thing that Democrats seem to agree on about their issue is that inflation and high gas prices is the problem. Now, Representative Ro Khanna has told NBC News that, "What is our message about why inflation is going to be worse if Republicans win? I don't think our economic message has been loud or sharp enough." And when asked about inflation this week, Nancy Pelosi said, "We'll have to message it better in the next 3 weeks ahead." With gas prices up again and a potential recession looming, voters are once again telling pollsters that inflation is the most important issue facing the country, reversing the boost that Democrats enjoyed over the summer when the public was more concerned with other issues. Democratic pollsters and strategists are sounding the alarm. Even as President Biden and some candidates sharpened their focus on inflation, Democrats are worried it may be too late. When inflation first started creeping up in 2021, Democrats tried to downplay the issue, arguing it was only temporary. Now, it's been a year over inflation, and according to credit card companies and banks, U.S. consumers have demonstrated willingness to continue to pay higher prices in the face of a sluggish economy that could be tipped into. Now, the demand for travel is particularly resilient as Americans make up for postponed trips due to the crisis. Consumers are also splurging on food and entertainment after the crisis has eased. Now, Bank of America is not experiencing any slower growth in spending either.